first want to ask you about several officials saw the case for cutting at the July meeting. Does that, I don't know, what does that tell you?
Not much, Carol, because that's something that Jay Powell had suggested in his press conference at that meeting. He didn't put a number on it, but he said there was a case made for cuts at that meeting. I don't think people pushed too hard for that, but you could imagine it was somebody like an Austin Goolsbee or even some of the others. But at this point, they all decided that maybe because Jay Powell and the majority were saying don't cut now, we will wait. But they do say in the minutes that the latest data they had gotten gave them more confidence that they were going to be moving down to the 2% level, and it would be soon appropriate to move rates.
Have any of the data that we've gotten since that July meeting of the Federal Reserve, Mike, shifted the way that you think any of these members of the Fed view the path forward?
Well, I don't think significantly shifted. What we have seen, though, is the weakness in the labor market report and then today's downward revisions. You've got some people who were suggesting they wanted to wait, like Raphael Bostic, who has now said he's open to cutting rates in September. And in that case, it's probably going to be the August jobs report that we get at the beginning of next month that will make the decision for them of how much they cut. It does look like they are on track to cut.
All right, so it's interesting too, Mike. You know, I feel like investors, you got bond yields, you know, falling. We saw that earlier on that big downward revision of U.S. payrolls, which reinforced those prospects for Fed rate cuts in September. So again, in terms of 25 versus 50, can we pretty much say at this point, if nothing dramatic happens between now and the next Fed meeting, that we get that quarter point cut?
I think that's the base case. If we got a weak August payrolls print, then that might move them towards 50. And if we got a big drop in the inflation numbers, which doesn't seem likely, that could also give them an excuse to do that. The question is, do they feel like they're behind the curve? And everyone I have talked to in recent weeks says they don't think that's the case, that they believe at this point the economy is pretty strong and doesn't need cuts in a we are worried about recession kind of way.
Well, that's a perfect segue to bring up something that you brought up just moments ago, and that was the payroll downward revision that we got this morning from the Bureau of Labor Statistics preliminary benchmark revisions. 818,000 for the 12 months through March of this year. Does that change the idea of the Fed potentially being behind the curve at all, Mike, that we see increased weakness when it comes to payrolls?
Well, I would think they would say no for a couple of reasons. One is because that implies that we went from an average monthly job gain of 242,000 to 174,000 over those 12 months. And 174 is still a very strong number. You're looking at about 100,000 for kind of a neutral hiring level for the United States. So the Fed would say we're still seeing relatively strong job growth. And also this number, as you mentioned, just goes through March of this year. There will be another quarterly survey that will be incorporated into these revisions when they put out the next round in January. And that could see a rebound, or it could see an even bigger cut. So they know there's more data coming, so it doesn't really push them too hard one way or another. And finally, the third thing is, of course, the revisions we got today don't count undocumented workers because companies don't pay the Social Security, Medicare, and unemployment tax on them. And so they could be overstating how much the revisions are. And all that gets worked out between now and January.
Okay, yeah, Mike, talk a little bit more about the immigration factor here and the undocumented immigrant factor here, because I've seen this mentioned a few times in different write-ups that I've read of these data going into the number and then after we got the number this morning. What are some numbers being thrown about by around the impact about the impact of undocumented migrants on the labor force?
Well, you know, there are not a lot of specific numbers because people really don't know. I mean, we know there were several million who came in over the past year or two, higher than we had been seeing. And we have seen jumps in the labor force, and that's what people are thinking is the reason that the undocumented aliens have influenced hiring, that they were getting hired for jobs, particularly in certain low-wage categories that weren't being picked up because, again, the companies don't pay unemployment insurance if you're undocumented because they can't get unemployment insurance. But we did see a number of revisions lower in the food services and bars and drinking places area, and also in some of the healthcare services area, where people who are undocumented often get jobs. So it's hard to say exactly how many are involved, but I'm sure there are some. We just don't have a good handle on it.
All right, Mike, so now I'm thinking tick, 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 this long list that we've all been ticking off different things to get to the next Fed meeting, which is September 18th. As you well know, we've had a lot of data points. We still have, another jobs report. We've got a couple of inflation prints before we get to the next decision. But we also have Jackson Hole, where you are. So just remind us of kind of what happens, what kind of discussions will come up, and is it really just all about what Jay Powell has to say come Friday?
Well, for people on Wall Street, it's all about what Jay Powell has to say on Friday. They hope he will say, we're going to cut rates on September 18th, which he won't, but that's what they'd hope for. He may give a strong signal that that is coming. The rest of the conference is basically academic theories about economics. In this case, the subject matter is the transmission of monetary policy. And so there will be academic papers presented and discussed, but none of it revolves around the idea of where are we now and what should we be doing right now.